Hi, I'm Khleif. Each and every week, I record an interview with a thought leader that I know you're going to get a ton of value from. Now, here on YouTube are the video versions of my podcast, Lifetime Cash Flow Through Real Estate Investing. Now, to make sure you get the latest information, please subscribe and hit the notification bell. Let's get started. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I am thrilled you're here, and I know you're going to get great value from the gentleman that we're interviewing today. His name's Matt Faircloth, and his company's the DeRosa Group. Now, Matt, he's a regular contributor on Bigger Pockets, and he's definitely a hitter in the multifamily space, got over 750 doors. He's also in other asset classes as well, but he's a regular contributor on Bigger Pockets, and he's got his own very active YouTube channel. He adds a lot of value there. He's got a book on Amazon that's a bestseller called Raising Private Capital, How to Build Your Real Estate Empire with Other People's Money. So we're going to have a lot of fun today. Plus, he loves to talk about mindset, which, of course, is my favorite topic. So welcome to the show, my friend.
Awesome. Thank you so much, Rod. Such an honor to be here.
Oh, thank you for that. Well, listen, maybe, we'll start the cliche way, which having you tell us a little bit about your background and how you got into this business, and then let's just take it wherever we take it.
Sure, man. No problem. So I grew up in Baltimore. Went to Virginia Tech and I got a degree in engineering growing up because a lot of people were like, hey man, you're good at math and science, so you should become an engineer. And a lot of my life, I just kind of did what other people said that I should do. Like I just followed other people's recommendations. And I didn't, as a kid, I didn't look into what an engineer did. I just, followed what grown-ups told me to do. So I was like, okay, that's fine. I'll go to school for engineering. I got about halfway through my education at Virginia Tech, and I realized, hey, wait a minute, I don't want to do engineer. That doesn't seem to really suit my personality, what I want out of life and everything like that, but I was already in. So when I graduated, I got a job in sales, selling technical equipment that required an engineering degree, but wasn't really an engineer by definition. And so I sharpened my sales saw there, and I used some of my math and science stuff and really just understanding, getting to know finance as well. So I became a salesman talking more finance with people versus talking engineering. Fast forward to met my future wife living in Philadelphia, and she got me to read Rich Dad Poor Dad. As a lot of new investors, read that book. It just, mindset, it just transformed a lot of the way that I looked at finance, the way I looked at life, the way I looked at my career. So I read Rich Dad Poor Dad. She got me to play the board game and stuff like that. And that caused me to start investing on the side, which was originally a house I lived in, rented it out to two buddies of mine. While my two buddies were living with me, was able to pay off like 30 grand worth of student loans and credit cards and all that in 2 years. And then I was hooked. I said, okay, I see it. I'm in. So my girlfriend and I started buying rental properties with my girlfriend on a loan from her father. Okay.
Where at, and when was this?
Philly. This is 2004.
Okay.
So we were buying rentals around Philadelphia on a loan from my girlfriend's dad. I don't recommend your listeners go borrow money from the girlfriend's dad. But
yeah, that can go a lot of different directions.
Yeah, but it went the good way. I married her.
Good.
I married her, so it was good.
Oh, good.
And that. So we ended up getting married, and right when we got married, we realized that it would be better to live way below our means. So we bought a half the house we could afford, and we lived off of her income. And right after we got married, I quit my job and started my business in 2005. And it's been a bumpy road, like got through the downturn, got through lots of twists and turns in life and all that, made some bad decisions, made some great decisions, and built a business over the last 14.
Well, we're gonna talk about some of the adversity that you went through, which we agreed to do when we first got going here before we started recording. But I wanted to circle back on a couple things you said, which are really powerful. One was, you were doing what other people thought you should do, what other people said you should do. And, it's interesting. I talk about this from time to time where there was this hospice nurse in Australia named Bronnie Ware, and she counseled hospice patients, and she asked them what their regrets were. And she even wrote a book about it called The 5 Regrets of Dying. And the number one regret, Matt, was living someone else's life, living what someone else told me to do. And so that really resonated with me when you said that. And the other thing that really resonated with me, and I hope you guys are listening to this piece, is that you live below your means. I mean, I remember when I had 500 doors, most of those were houses. I was living in a 1-bedroom apartment that was free rent because I had a business that did advertising for that apartment complex, when I could have lived anywhere. But I was building. And so, it's like that adage, grind now or live like other people won't for a few years to live like other people can't for the rest of your life. So really loved those two bullets. So let's talk about, so you're in 750 doors. What markets are you in?
We're in Pennsylvania. It's like central PA in the Harrisburg, Lancaster area. We're in New Jersey, central New Jersey. We're in North Carolina, Fayetteville, North Carolina, of all places, and then Kentucky.
Wow. Oh, that's right. You told me Kentucky. Yeah, we bought assets there from the same broker. Let's talk about some of the bumps in the road and what it took to get through some of those bumps in the road. Everybody's heard about my big bumps in the road, so it'd be great not to have to relive mine. Let's talk about some of yours.
We could do like the bump in the lesson,
Love it.
Right. So first bump I would think was that, quit my job, bought a few properties after I had quit, did something called a 1031 exchange where we sold some of our Philly stuff up into some larger New Jersey stuff. So good decision. And then we bought residential real estate. Then we bought an office building, right? And it was like a complete different animal. And in running, the reason we bought it was in running the numbers in the office building, it seemed like it would cash flow really, really well. And it seemed like one of these home run slam dunks. I closed this deal and I'm out of the rat race. Like it was supposed to make me $5,000 a month. In cash flow, and the mentality was we bought it for $50 a square foot. Back then, that was pretty cheap. And the state of New Jersey, this is under a governor called Corzine, they were just gobbling up real estate left and right and leasing it at $18 a square foot. So $50 a square foot.
The state was doing it?
Yeah, the state. Where they were growing and adding employees and signing 20-year contracts and stuff like that. The state of New Jersey, they were growing huge. This was anyway, Governor Corzine loses the election to a guy you might have heard of named Chris Christie. Okay. Chris Christie comes in and says, nope, we're canceling all these contracts. We're laying all these people off. We're cutting the size of the government back. And so Matt Faircloth left holding this office building that I was negotiating a deal with the state on and had the state maybe looking to lease from us gone. So, and then right after that, the downturn happens, right? So companies are no longer looking for 10,000 square foot anymore at $18 a square foot. Companies are pulling back, they're laying employees off. So we had to pivot. And so the lesson was, there was lessons in the pivot, but the mistake that we made originally was getting out of our wheelhouse too fast. And I get that you can buy a couple of apartment buildings and maybe start exploring mobile home parks or start exploring self-storage or whatever. But we were all over the place in dealing with things that we knew. And we should have just stayed in residential real estate. And I think we would have grown a lot faster. We had a lot of lessons out of it, but I had a lot of sleepless nights, when all that hit the fan too.
Yeah. Listen, guys, focus is power, my friends. And I remember when I diluted my focus in a previous life, because I'm an entrepreneur, shiny penny syndrome. I built 24 businesses and several have been worth a lot of money, but most have been spectacular flaming seminars. And it's every time, most of the time it's been when I've diluted my focus. And so, and the same thing applies in asset classes in real estate. Now there are some people that can do it extremely well, but until you master one, for sure, you shouldn't be jumping into another one. And I'm guilty of that myself. So yeah, that's a pretty good one. So you were going into 2008 with an office building, which, wow, I can't even imagine.
A vacant office building.
That was
costing me $6,000 a month. to keep going.
So
right?
what'd you do? What'd you do to, I mean, did you end up giving it back? What happened with
We
that?
kept it going, man. After the pity,
Okay.
I mean, after the pity party was over, which we gave ourselves a day or two to be
Right,
satisfied.
right. I gave myself a whole month or maybe 2 months even, believe it or
Yeah,
not.
right,
Yeah.
right. But at some point, like you said, you either got to give it back, you got to get. But I'm proud to say I have never missed them in my 14 years of business. I've never had to give anything back to the bank. I've had to go back to the table and say, hey, we need to have a talk and renegotiate
Right,
this thing.
right.
But I've always made it work. And so we saw the opportunity in that after the downturn, a lot of people were getting laid off. And then a lot of people were starting their own businesses. And so we cut up the building into like a small business center. I mean, and doing like a hip version of Regis.
Of like WeWork kind of a thing, huh?
Yeah, but I keep my shoes on and I don't drink as much tequila as that guy does. So, right. But like WeWork, but not quite as New Yorky and hip, more just like a tertiary market, urban kind of thing. We just took an
Almost like
building.
executive suites kind of a thing.
Exactly.
Yeah.
So we started doing that. And like my first tenant was a guy who had gotten laid off from a huge law firm and decided to say, you know what, screw it. I'm not going to go find a job. I'm going to go start my own law firm.
Hang my own shingle. Yeah.
Yeah. He hung his own shingle out. And so
Right.
I gave him one of my units with a window up front. He put a big law firm banner up there and he's been in business for 12 years now. And the only advertising he does is the sign in the front window of his office.
No kidding.
God bless him.
No, that's awesome. And so you just let a lot of one-offs in then like that.
Let a lot of one-offs in, just leased them. And it's funny, $18 a square foot was what I was hoping the state of New Jersey would lease to us for. I ended up leasing offices at $32 a square foot because small offices there's an economy of scale, and it'd be like renting an apartment. If you're renting a little 10 by 10 cube to somebody, they're not going to just pay you $100 for it. There's a certain lower limit of what people
it's going to be higher the smaller the space, for sure.
Right. So
did you offer any services? I mean, I don't want to go too far down this rabbit hole, but did you offer any services like reception or anything like that, or was it just the space?
We grew into that. We grew into offering mailboxes. We tried on things that didn't work. We tried on offering them a telephone in their office, but then I was like, hey, wait, I'm not in the phone business, and this got to be a pain in the neck and stuff like that. So we took the telephones out. No, thank you, no telephone, but we give them internet. And we give them utilities, and we give them, like, I took a few offices in the building and turned them into public conference rooms.
Nice.
And that's so they get conference room space. They don't have to factor that in their rent. They can just have a little office with a desk and use the community conference room when they need it. So
yeah, that's what a lot of executive space is like. I've had companies lease space like that. Awesome.
Yeah.
So tell me, let's talk about, when you were going through that, because I mean, I went through it. I couldn't hold it together. It was just, it was insurmountable for me just because of the scale of my situation. But when you were going through it, how did you stay positive? How did you, let's talk about the mindset it required to not throw in the towel and give up, because that was a pretty big kick in the face. So talk about that a little bit.
Yeah, man. So I've noticed in my life that if I give enough time, things work out, and if I just do one simple thing, if I just don't quit, whatever it is, don't quit, don't quit. And, we can get, there's other stories that I got, like the time that we had $750,000 stolen from us, stolen.
I hold off on that. We're going to ask you about that. But I want to say something to what you just said, because I want to put an exclamation mark on it. Anything, guys, anything you give your total freaking focus to and not give up with is going to flourish, period. That's just the way it works. Yeah, and I can't tell you how many times, one of my businesses was about to go bankrupt, and we just pivoted and made it work and turned into a $10 million company within a year. And we could have quit. And, there's a book about this called 3 Feet from the Gold. So many people give up right before the breakthrough. And, but that time, equals success piece, back to that, again, if you're totally focused and you've got, you're not diluted and you're not all over the place, the reality is anything you give extensive time to is going to flourish. Yeah. So let's talk about that next $750,000 blip.
That was a while. That was a
so
while
what happened?
Further, but So I sold a this was once my wife Liz and I had, smacked ourselves in the face and said, what are you thinking buying this office building? We made the office building work, but realized that it stunted our growth. So while we were getting the office building leased out, we got back to our core and focused on residential. And we scaled up through residential real estate, and raised, started raising money from investors and doing super small deals and then slowly growing it up into larger deals. And one of our larger deals that we had done at the time was an 18-unit apartment complex in Philadelphia. So we sold that 18-unit apartment complex. We bought it. Bought it 50% occupied, total, lots of hair on the what. And
when was this? Just so I can get some context.
I got you. It was 2013 that we closed.
Okay. All right. Got it.
Bought it.
Okay. Good.
Bought it in 13.
Got
it. Bought it from the guy that built it. He owned it for 40 years and named it after his wife. It's called Carroll Manor. Named it after his wife. God bless. He's a contractor guy that saw the power of real estate. So built himself an apartment building, paid it off, owned it free and clear when I bought it from him, and as a big reward, took his wife to Hawaii right after closing. God bless, man. Victory lap, and so, but he'd kind of gotten out of really landlording and managing it. So the wheels were starting to come off. So he sold it at the right time. He was only 9 of 18 units were occupied. Everything was original. And I think there's a lot of, and this is a lesson to your listeners, there's a lot of generational owners. And this guy was 75 years old when I bought it from him. Right. And so there's a lot of baby boomer owners that got into this business in their 30s and 40s that are now looking to exit from multifamily real estate. Call them mom and pop shop owners. This guy was going on the show. His wife was keeping the books. He was the legs. She was the one keeping the books behind him, right? Owners like this. You probably bought a lot of buildings.
Oh, sure. They're a gold mine when you can connect with them, build rapport with them, and be around when they're ready to pull the trigger.
Yeah,
absolutely.
Yeah. So we found this guy and we bought the building from him, leased it out, renovated the apartments, got everything up to he was $100 a month short on all of his rents because he didn't want these people to, didn't want to upset the
He didn't want to deal with turnover. So got it. Yeah.
He also gotten buddy with his tenants. A lot of them were his friends, and that. So we unbuddied all that, and so leased the rest of the units out. Fast forward, bought it for $1 million, sold it for 1.5 3 years later. Right.
Nice.
So great deal. Now I had a group of investors in this thing. I was going to do a tenant in common to get it a little more complicated. We were going to sell this building, take the $700,000 profit that we made. We were take the profit plus the equity we had into it, and roll it into roll it into a 198 unit in North Carolina as a tenant in common through a 1031 exchange.
Right.
So all that lines up. We give the money to the 1031 exchange custodian. I called the custodian 2 weeks before closing on the 198 unit, and it turns out that they were running a Ponzi scheme.
Oh my God.
Yeah, man.
Oh my God.
Yeah.
So it was complete fraud on the part of on the custodian.
So he had defrauded $6.5 million in money.
Wow.
This guy.
Wow.
Yeah.
Jesus. That's a kick in the butt.
Yeah,
wow. I was going to circle back on something else you said, but I'm a little speechless. What happened? What ultimately happened?
Well, a lot of tears and a lot of oh man moments and stuff like that. Like brought it home to my wife, and I had a 3-year-old at the time, and he heard that daddy had money stolen from him, and he went and got his piggy bank and gave it.
Oh, geez.
That right now, but my son went and gave it. There's all the $3 in it, and I'm like, thank you, son.
Oh, wow.
Yeah.
Wow. Did you recover anything, or was it just gone?
Yeah, no. It's got a working on a happy ending. So me and these other guys, the other men and women and everybody with the 6.5 million all got connected. And so it was funny is this guy was taking the money, and some of it was getting blown and that, but most of it he was investing in real estate. So he went and bought himself a couple mobile home parks, bought a self-storage center, bought 70 single-family homes in Jacksonville, bought himself $1 million house on the beach.
Wow.
I did all the stuff with the money. And so we formed a class action suit against him. and we're in the middle of repoing a lot of that stuff. And his insurance company stepped in. And
You are doing it right now? You're in the middle of it?
now.
Wow.
Yeah, brother. So
Wow.
we have a settlement on the way though. So we're
Wow.
looks like we're going to get just about made whole.
Wow. Well, that's great news. I mean, it's bittersweet because of all the crap you've had to deal with to get there.
It was 2 years ago. So
Yeah.
I need to underscore something. It's about mindset and it's about doing the right thing, right? So that 700 grand was not all my money. Part of it was, but most of it wasn't. And so I could have gone and calling my investors. There's like 10 of them in this deal and gone, hey guys, guess what? We just got robbed. And this is what I'm going to do about it. And this is how I'm going to fix it. Right. Those folks had invested with me as their custodian of their money. Right. They trusted me, and they trust people when they invest in syndications, they trust. And so I didn't feel right, going and saying, hey guys, listen, I'll let you know when the money comes back. So what I did was, we were investing in this new deal. That 700,000 was supposed to buy 18% of the property, right? My side, me and my partner's side, was 30%. I gave them most of my chunk of that 30%. Yeah. I just gave that to investors and say, okay, you're covered.
That was the right move. Yeah, that was the right move. And luckily you had that ability to do that. And I've heard other operators have similar stories where, they end up working for free on a deal to keep their investors whole. And that's what you have to do. So that was the right thing to do, man. That was awesome.
And you got to put investors first to everybody in that. And I think that, it just comes from a gratitude standpoint that, number one, I know that there's more where that came from, and number two,
there always is.
I'm grateful to have these people. And if I don't have a scarcity mindset that, I got to protect myself and protect my deal and I can't let them have mine or whatever. If I have a prosperity mindset about it, then I know that I'll get taken care of in the long run, So.
Yeah. No. This is, I don't know, it's been quite that much, but I've heard other people, wires that went to the wrong place, things of that nature that really were a nightmare. And people had to, just re-pencil the deal to make their investors whole. And that's just, that's what you have to do. That's part of this business. You absolutely did the right thing. I want to circle back on one thing you said, just to put an exclamation mark on it. And that is, guys, I honestly would avoid having your residents even know that you're the owner. We're talking about buddy tenants, because I can't tell you how many deals we've seen where rents either haven't been raised or they've got a property manager in place. They're paying them way too much because they became friends with them. Just be very, very careful with that dynamic. So are there any other early failures that have contributed to your long-term success?
There's on the marital side, my wife Liz isn't here, and that, but I think that finding a good balance between in working with your spouse, and a lot of real estate investors work with their spouse, and that's just there's actually a really good dynamic to it. Liz and I have found a really good equation in working together now, but in the beginning, we were all over each other, and there was a lot of failures in the beginning of working with the one you love most, your spouse. But there's certain rules of engagement. And we tried a lot of rules. We tried one, it didn't last very long, but there was one rule where, like, we can't talk about the business in certain rooms of the house. There's certain rooms for discussion of the business. That didn't work. We just needed to really understand personal boundaries, that if I'm been working all day and I come home working on it, she just gives me some space now, and we have more scheduled times to talk about it versus rooms of discussion and whatnot, because it just didn't work out that way.
Yeah, that's right out of John Gray's book, Men Are From Mars, Women Are From Venus. And guys, men are like, I'm not going to read that sissy female book, but I'm here to tell you that when men come home from working, and this is not a sexist thing, this is just a trait of being a male. We need a little time to decompress before we can be there for our woman. And we need a little time. John Gray calls it being in our cave. We need to go in our cave for a little bit and just be to ourselves. And on the flip side, when a woman comes home, she's spent the whole day filling up her purse, figuratively, okay? And she needs to be able to unload that so she can be her beautiful feminine spirit self. And she's going to want to tell you what happened. And men have such a tendency to want to fix it, but they don't want it fixed. They just want you to listen. And sometimes it seems like they're complaining to you about what's going on, and you feel like you need to fix it because you're in fix-it mode. And men fall into that trap where you just need to listen and let them get it out. And again, this is not sexist. This is right out of Men Are From Mars, Women Are From Venus. But at least it's been true in my life that you feel
throwing the integration of working with your spouse too on there.
Right.
And sometimes during stress moments where it's like, bought a property, it's not quite working out the way that we wanted it to, or
like the examples you just gave, right?
Yeah, or even like those are like 9 out of 10 or 10 out of 10 level of intensity moments. Right. It's actually the 4 to 5 out of 10 moments that really hurt, that really bite, because they just they're not that intense, and you can kind of put them aside and like, okay, this is something that'll get worked out. But if you don't allow the relationship to be first, then you can allow those 3 to 6 out of 10 level of intensity things that need to be discussed, but can be discussed later. You can allow them to take precedent over the relationship.
So tell me, so what you just said is obviously one piece is the relationship comes first.
Yes.
The love, the connection, all of that. Hey, we'll deal with this other crap because that's just stuff. Yep. But we are whole. We are together. There's nothing that will ever, rock this ship. Kind of an attitude. Is that what you're saying?
That's what I'm saying. And because like the little BS stuff, like the 3 to 5 to 10 the 6 out of 10 things, like the fix and flip is taking longer than we thought, or this
over budget.
Yeah, we're over budget. This tenant didn't pay their rent this month, right? Does that really need to be in the forefront of me? Again, another book, The 5 Love Languages, phenomenal book, because it taught me how to really love my wife, or in the way that she needs to be taken care of, right? So does that really take precedent to me, like giving her a bit of what she needs as my spouse? It has, and I can tell you that doesn't work.
It definitely doesn't work. And guys, I think I've talked about it on the show. I talk about it with my students all the time. That's one of the gifts they get from me is the 5 languages of love, because like in my first relationship with my ex, my love language is gifts. My students get gifts from me every month. I mean, I just love giving gifts. That's how I express love. But my ex-wife's was acts of service. So I'd give her literally hundreds of $1,000s worth of gifts, and she never felt anything for it. But if I did the dishes, oh my God, the clouds would part. And that's how she felt love, if I did something. So those of you that don't know what they are, the 5 love languages are touch, which is also one of mine. Acts of service, like I just described, honey, let me do the dishes tonight, or do something for you. Words of affirmation. Oh my God, you're so amazing. You're so beautiful. You're just incredible. Quality time. That happens to be my wife. Tiffy's is quality time. Doesn't matter what we're doing. We're together. It's quality time. And then what's the 5th one? Gifts, which is my. So awesome book. So besides that, any other strategies that you've used to nurture and protect the relationship with all the, and anything else come to mind, or did we cover it?
It's become even more dynamic in having kids. But just making sure, because it'd be real easy to let the business and the kids be our 2 priorities and let us become way down. And I've witnessed divorce happening. I'm like, okay, that's how that happened. You just let the relationship fall the way down here. So we don't allow that to happen. And that's, simple stuff, date nights.
Gotta have date nights.
Yeah. And we have a thing that we're both into aside from the business. It could be something totally stupid, like a show on Netflix, right? Mm-hmm. We both make sure that we have a thing that we're into that we discuss, or a book we're reading together, or, like a transformational weekend that we can do together. We've done a lot of transformational stuff. If I were to go to Unleash the Power Within or something like that, I wouldn't go without her. Because I want to.
That's a Tony Robbins event, guys. Those of you listening, Unleash the Power Within. That's the one where you walk on fire the first night, and I've done it probably 40 times. I'm not exaggerating.
That's awesome.
I've worked it. I was on his team for a while, and
I didn't know that.
Yeah. Worked it a lot.
That's what we haven't done.
I followed him for 20 years. I mean, that's
awesome.
That's when you mean by a transformational weekend. That's awesome. You do that together.
Well, so we've done Landmark together and stuff like that.
Landmark as well. Mm-hmm.
Yeah,
Landmark
man.
Forum.
But the bottom line is, if you're going to engage in personal transformation, do it with your spouse, because we as humans kind of grow, and we're kind of like a kite tail. We just kind of grow and go in different directions and stuff like that. And if you're not doing your growth with your spouse,
one gets left behind.
Yeah, man.
I've seen it. Yeah. I've seen it many, many, many times because I've been around that Tony environment for so long. Yeah. By the way, if you're going to do that stuff, just to give Tony a plug, the event that's the most dynamic for relationships is Date with Destiny. And that's one I've literally done, I'm not exaggerating, 16, 17 times. And it's Netflix, like right? Anything. What's that?
Is it the one that he did the movie on Netflix?
That's the one he did. Yes, I'm Not Your Guru movie on. Correct.
It was a great movie. Looks like a phenomenal weekend too, man.
I would have been in that. I would have actually been in that because I was working with him before that, but I had a bad car accident, so I kind of had to quit. Oh. But anyway, I couldn't agree more. And back to putting the relationship first, guys, those of you who are in a relationship, that relationship with your spouse is even more important. At least the perception of it needs to be more important to your children than the relationship you have with them. When you come home, you need to put that spouse first, because they're going to model what they see. And they need to see that relationship with you and your spouse is the most important. That's how I feel about it. And you've got to carve out quality time. You know, I take my students in my live events through a weekly planning process. And part of that process, you know, because like for me, one of my biggest regrets in life was I'd come home to my kids every day and I would play with them, but I was distracted. I wasn't present. And I will, you know, and you guys have heard this on the show before as well. You know, your kids or your spouse would rather have your presence for a short amount of time than a long time of distraction. So, you know, one of the things you might do is actually block time with them. You know, that can be very powerful.
And put the cell phone in the drawer, man.
Exactly. Cell phone's got to go in the drawer. Bottom line.
We have a no phone policy. We have family dinner almost every night. We have dinner together.
How old are your kids?
5 and 2.
No, wow. Hands full. Nice.
Yeah, man. And today, this is being recorded on Halloween on the 31st.
Yes, it is. Yes, it is.
Yeah. So tonight
today's a big day.
I got a Power Ranger and Wonder Woman going out tonight.
Love it. You know? Love it. Oh, I saw that. I see the shield behind you there. Yep.
A friend of mine gave me for my birthday. I'm a huge Captain America fan because I love Captain America, not to dork out a little bit, but Captain America as a human was strong on the inside first. And then they gave him the technology that made him strong on the inside. If you saw the movie, you read the comic books or whatever, he was a strong-willed human that was actually like you know, physically small and everything like that. And then they gave him, they made him big and bulky and everything like that. But he was strong in his head and his soul.
Love the metaphors.
Yeah, I know. That's why I'm a huge Captain America.
Yeah. So for those of you listening on iTunes, he's got this Captain America shield behind him on the floor. Very cool. Very cool. So let me ask you this: if you were coaching somebody you really cared about this business, what would you make sure they learned in, say, the first 30 days, 90 days? How would you coach that process?
Well, I would say that that if you're really just going to get into the space, the first thing you got to do is I would say set 5-year goals on where you want to be. Just commit to be in this thing for at least 5 years, and to try. Don't just try for a month and then quit. Try for 5. You know, be engaged in the business for 5 years, and write your life story 5 years from now. But what life's going to look like 5 years from now, you know, it's spoken in first person. And then lay out like a real reasonable track record that's stretched but not unreasonable. I mean, don't be telling me that you want to buy 500 units in your first 2 months of being in real estate.
Right.
You know, be realistic, but stretch yourself. You know, I mean,
but dosed in reality, so your brain can actually wrap around it. Otherwise, your brain's going to go, "You're full of shit," and you're not going to get 1,000 doors in your first year in business, most likely. So you know, dose it in reality. But yeah, I love it with a stretch. And I love what you just said about articulating your 5-year story. And that's one of the things we do in my events is I have the participants literally write down their perfect ideal day. This is a version of that, where they just write down from the morning they get up to when they go to bed, what they're doing and what's in their life and who they're helping and who they're spending time with. Because the more you do that, like writing your story in 5 years in the in first person, it pulls you into it. You associate with it. How are you ever going to have it if you can't visualize it and feel it and see it? Yeah. And so, I love that.
And feel that joy being in the moment as if
you're
there right then. Yeah, man.
Right. With gratitude as if you're already there.
Right.
I mean, and man, that's how that stuff comes into your life, guys. I mean, I went to the Fort Lauderdale Boat Show yesterday because one of my things is I want to either buy or rent a yacht and go all the way around the Mediterranean from Spain all the way around, around the boot in Italy down to Croatia, Greece, all of that for a few months. And so, the more you can experience what it is you want to do, the faster it's going to come into your life. And so, that just like you said, by describing your 5-year story, kind of the same thing. You associate with these things you want in life. So do you have any morning rituals that you do?
So when I'm on my game, because I'm not perfect, right? There's plenty of times that I'm not on my game. But when I'm on my game, I wake up between 5 and 6. I get up. Bottom line, I do the Miracle Morning.
Fantastic. Yeah, I've had Hal Rudd on the show, and that's another book that I give to all my students. I've got one student that's literally done it. He's done it for 3 years straight, never missed a day. Yeah. So those of you guys don't know what that is. The Miracle Morning, you get up, you exercise, you do some meditation or prayer, you journal. He calls it scribing, I believe, and you read something quality, not crap. You read something in a good book. Is that correct? Did I get all that?
Yeah, it's called the SAVERS as an acronym. And you go work out. You do something to move your body. So when you get up in the morning, lots of people get up in the morning, they throw on the clothes they wore yesterday, throw in their pajamas, whatever. If you just create the habit of putting on your workout, when you get out of bed, put on your gym shorts and even if you don't go right to the gym when you get up, get in the attire of working out right when you get out of bed. And I love them. I've done afternoon workouts or evening workouts. I love just going for a quick run, weightlifting, whatever it is I got to do just to get my blood pumping in the morning. I find that my attitude is up all day. If I get my heart rate up just first thing in the morning, that's such a great way to get it going.
Love it. Love it. Love it. All right, guys. Well, listen, check out his YouTube channel. Check out his book, Raising Private Capital, How to Build Your Real Estate Empire with Other People's Money on Amazon. And Matt, I really appreciate you being on the show, brother. I've had a lot of fun with this, and I'll talk to you soon, my friend.
Well, thank you, Rod. It's been an honor to be here.
All right.
Hey, thanks for watching. Please subscribe to my channel. And if you listen to podcasts, join me on iTunes, Stitcher, or wherever you listen to those podcasts. Just search for Lifetime Cash Flow through Real Estate Investing.